Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 23rd of June. The Canadian dollar surged yesterday following the release of exceptionally strong retail sales data for April. The surprisingly robust data may have added fuel to recent speculation regarding a more hawkish stance by the Bank of Canada in coming meetings, which arose last week after Bank of Canada Deputy Governor Wilkins said that the bank will be assessing whether all the monetary stimulus currently in place is still needed. Today we get the nation's CPI data for May, which we expect to be of high importance for market expectations regarding the Bank of Canada's next move. The headline CPI rate is expected to have ticked down, while no forecast is available for the core. In case of a pullback in the headline rate but an unchanged core rate, we could see a modest negative reaction in the Canadian dollar, but we don't think that this will be enough to curb speculation regarding a more optimistic Bank of Canada amid a robust labour market and signs that quarter 2 GDP growth may be stronger than previously expected. We believe that a slide in the core rate is needed to harm market expectations with regards to a more upbeat Bank of Canada. Dollar CAD edged south on Canada's retail sales data. The rate tumbled after it hit resistance near the upper bound of a possible flag formation to hit support at 132.10 near the lower bound of the flag. The prevailing trend remains negative in our view, and as such the downside exit of the flag could signal its continuation. A dip below 132.10 is likely to initially aim for the 131.60 hurdle marked by the low of the 14th of June. Another dip below the latter level would confirm a forthcoming lower low and perhaps set the stage for extensions towards 130.80, a support defined by the low of the 27th of February. Now moving to Norway, the Norges Bank kept its policy unchanged yesterday via unanimous vote. In the accompanying statement and monetary policy report, the bank revised up its GDP forecasts for 2017, and even though it marked down its expectations for near-term inflation, it upgraded them for the long term. Perhaps the most notable change was that the bank removed its easing bias and now expects the key policy rate to remain at the current level in the period ahead, while it revised slightly higher its expected rate path for 2017 and 2018. As a result of these signals, NOK gained on the news. Moving forward, we are cautiously optimistic on the currency, at least over the next few weeks. Even though the currency has taken a hit lately due to lower oil prices, Norway's economy appears to be robust, and the Norges Bank looks to be shifting to a more sanguine tone. Our view is also supported by the latest comments from Norges Bank Governor Olsen, who noted that the currency is likely to strengthen somewhat in the period ahead. Dollar NOK traded lower following the Norges Bank decision. The pair fell below the support, now turned into resistance of 8.51 to stop at 8.4660. Although the rate continues to trade within the upward sloping channel that has been containing the price action since the 18th of May, we see the likelihood for the pair to continue correcting lower. Decisive dip below 8.4660 would confirm the case and could initially aim for our next support barrier of 8.42. Now, as for today's highlights, during the European Day we get preliminary manufacturing and services PMIs for June from several European nations and the Eurozone as a whole. Most of these indices are expected to have remained unchanged or to have ticked down. Nonetheless, all of these indices are anticipated to remain at elevated levels, consistent with solid economic growth in Eurozone. Such prints would be in line with the ECB's assessment that the risks to euro area's growth outlook are now broadly balanced and could enhance our view that the bank will probably continue to shift towards a more sanguine tone at its upcoming meetings. Thus, such figures could bring the euro under renewed buying interest. Now, from the US, we get the preliminary market manufacturing and services PMIs for June, but these are usually not major market movers. The market tends to pay attention to the ISM indices, which will be released in early July. We also get new home sales for May, and the forecast is for an increase from the previous month. In Canada, as we already outlined, CPI data for May will be in focus. We have 3 FOMC members scheduled to speak today: Fed Board Governor Jerome Powell, Cleveland Fed President Loretta Mester, and St. Louis Fed President James Bullard. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.